All right. Welcome back, everyone, to another episode of the Crypto and Coffee podcast. So, if you're just tuning in, I'd highly advise you to grab your favorite cup of coffee, tea, even, a bottle of water, and we discuss, points and topics on, tech, Web3, and everything in that space of blockchain. So today on episode 6, I am one of your co-hosts, Giordano Burtz Morris, and let's introduce the other co-hosts, David Blackstone and Cordell. You guys, take it away.
All right, Cordell Tanny. I am the co-founder of Vault 42 AI. We're an algorithmic trading firm specialized in pretty much programmatic trading of cryptocurrencies, traditional assets, and do a little bit of teaching as well. So I think I'm hoping by this point our audience is getting to know us a little bit. So don't need my bio every time, but hey, I'm sure we have a lot of new people joining us.
And I'm David Blackstone. I'm the creator of the Symphony Chain and now the Aria wallet, which we'll be releasing next week. So that'll be nice. Hopefully that one does well. We'll be adding new features to that as we go, but we'll see.
All right, and my name is Giordano Burtz Morris. I am the CEO and one of the co-founders of a digital asset platform called Orchestra that revolutionizes the way that people trade in the current crypto market. So we offer a variety of different features to help you trade and give you a lot more freedom in the market in terms of options. So today on episode 6, we have a nice and vague topic that everyone, can basically, chime in. And the topic is why is the crypto market unique, right? So I'll just start by saying, unlike stocks, I think Cordell, you've been trading stocks for a good while previously.
25 years.
Nice. Previously, so I can safely say, and both of us can safely say, is that one big asset to the crypto market is that it never sleeps. Would you agree? Would you agree that that's one of its strongest points as of right now?
Oh, absolutely. I mean, absolutely. The fact that you can trade it 24/7 is huge.
Okay, and the thing about it is that it's not like centralized like Forex, or I think stocks is a little bit more centralized too. Correct me if I'm wrong.
Oh no, it absolutely is. I mean, like, let's say, just for example, if you're a company listed on multiple exchanges, right? I mean, you'd have to be a really big company, one, to be able to afford listing on multiple exchanges. And you're trying to raise money in different markets by doing that, but there's pros and cons to it. But no, it's absolutely centralized. If you're Google or something like that, you're listed on NASDAQ, why would you want to be listed anywhere else? There's just very little advantage. So if you're listed only on one exchange, I think that pretty much is the definition of centralized.
Yeah, I completely agree. And like for the crypto market is completely decentralized. No single country, bank, or institution controls the market itself. David, do you have anything to add to the whole point of it?
Well, it is more decentralized, yes, but it is still for the big players. So you have listing fees, and those might be coming down soon. But for example, listing with Binance, you have to give them a very high % of your chain, and then also a listing fee. Coinbase, Crypto.com, you have to have some amount of following, which is why so many crypto groups bought their followings. And then same for activity. You have to have some measure of activity, so they bought the activity on their chain as well. This is so they can become listed, so they can become discoverable, so that way they can basically cheat their way onto the scene. But if everyone's cheating, that's basically just the rule. So you have a bit of centralization there as well. It's not as much, but it is moving in the right direction.
Yeah. So what David said was I highly agree with his point. And with the introduction of crypto being a very unique market, it does introduce a lot of asset class in the market. So you have layer 1 networks like Solana, Ethereum, then you have decentralized finance, lending, yield farming, and then DeFi exchanges. You have NFTs, DAOs, stablecoins, and other form of asset classes like meme coins or even altcoins or whatever. One thing I wanted to like propose to you, David, you were talking, well, both of you guys were talking about the whole premise of like, centralization and decentralization in the market, right? So we all know that Bitcoin is probably the biggest cryptocurrency out there as of right now, right? The scenario I have in my head is that, do you think if banks kept buying up more Bitcoin, is it going to become more centralized?
Ooh, I mean, you know what? I think that just actually starts off a wider discussion because, I mean, I think the first thing you'd have to address with that is do you consider Bitcoin in general to be more centralized than other currencies, even let's just say Ethereum or Solana? So one, I would say, is Bitcoin more centralized? Because remember, there's fundamental differences between the layer one of Bitcoin and all the other layer ones, fundamental differences. And this is why I think this could wind up being a huge discussion just in itself, because, if hopefully we'll agree, maybe we won't. Ethereum, if we think about Ethereum, the layer one and the applications of it, there's obviously, well, maybe it's not so obvious, way more applications of Ethereum than there are for Bitcoin, right? Because it's a smart contract. As I understand it, Bitcoin is not a smart contract. How many people are building on a Bitcoin layer one? Probably no one, for very many reasons. This is one of the reasons why we have wrapped Bitcoin, where we put Bitcoin on the Ethereum network so that we could have the benefit of Bitcoin, but on a smart contract. So I think that just comes down to really get to your question. I think we need to address what is Bitcoin compared to the other cryptocurrencies, and what exactly is the value. Because if banks are going to continue to buy it, and it's not just banks, it's all the exchange traded funds, it's all the institutional ownership, and a lot of it being passive right now. Well, what is it? What's the value of Bitcoin other than people are just buying it because it is the largest market capitalization, it's been around the longest, it has the most in circulation, but does it actually confer any value? And I, from a traditional finance background, and I see these debates all the time, you're going to see all of the legacy players out there, all the big research shops, and no offense intended, these guys tend to be older. These are not Gen Z. They're saying Bitcoin's going to go to zero. It's going to crash because it doesn't do anything. I would argue Ethereum does something. So to answer your question, if Bitcoin's going to continue to be hoarded or amassed by banks, I think we have to demonstrate that there is something to it other than just supply and demand. And I think that's really just the way to start off this conversation based on that question, Joe, is what is Bitcoin and what is the value for an institution to start buying it?
Yeah, David, if you want to chime in a little bit on that.
Yeah, the reason I bought into Bitcoin when I did, and the reason why I sold it when I did, was because I buy things based off of narrative. So if I see large companies and countries buying into this, then I think, okay, well, there's demand there, and I can ride that demand for a bit. Okay, great. Now, when you see a lot of companies and countries shifting away from that over into something like stablecoins, then there's not going to be as much demand for Bitcoin. When you see countries adopting this, you see El Salvador adopting Bitcoin. You see a lot of others adopting stablecoins for their currencies. So Bitcoin, with what it does, it does decentralization over transaction settlement. Great. Every blockchain does decentralization over transaction settlement. Now, if you have a bunch of countries buying Bitcoin, great. Maybe you get centralization within the currency. That really depends on a lot of factors. The reason why Bitcoin, I don't think it would be centralized, is because you also have to buy up all of the different miners for it and have a majority on miners, which is why proof of work does so much better than proof of stake on decentralization. But with regards to use, like the use case of blockchain can be like, it's not a single chain that does that. You can fork that code base and do it as 1,000 times, which is exactly what happened. So we have 1,000 different blockchains that do blockchain settlement. Great. Now, if you have other use cases, that actually brings utility. Now we have something else. So I sold Bitcoin when I did because of what I said happened. I don't see demand continuing to run up the way that I did. I can get the same returns from elsewhere. Well, I cut out for a bit there, so I'll just leave off from where I was talking about with forking the code base. So if you fork Bitcoin 1,000 times, and now you have 1,000 blockchains for settlement. Now, if you can have everyone move on to one of those, great. You have all the users in one place. But what ends up happening, like we saw with stablecoins, is everyone wants their own. So every bank wants their own blockchain, every person wants their own coin, all this stuff. It's going to decentralize all those cases until they all come into one place. And that place is going to be where the utility is. For example, Ethereum, a lot of people are using that for utility. Solana, a lot of people are using that for utility and speed. I don't think people are going to move over to Bitcoin because I don't see use cases there. I do see use cases elsewhere, and I don't see as many people in the market right now caring about decentralization as they did before, caring about the technology as they did before. I see a lot of people that care about making money. I see a lot of people that care about control. I don't see a lot of people that care about the tech or decentralization aspects.
Okay. Now on that, if I might ask you, David, right? So Bitcoin basically itself we can all say this is the godfather, the first ever cryptocurrency to ever really touch the market. I think it was in 2012, and then from there, people slowly started to adopt it over the years, right?
Mm-hmm.
So basically, other cryptocurrencies' main basis is utility. Do you see Ethereum even being worth a lot more than Bitcoin? Because Bitcoin is probably around 10 times or even like 20 times more than Ethereum, well valued at what it is right now.
I mean, I personally do. I mean, and I think one of the ways I look at it, right, and again, like David, but I think both you guys are going to know way more than me when it comes to more like the infrastructure and the inner workings here. But, I've learned so much in the past year and a half since I really started diving into this and building vaults and trying to do on-chain active management. So the one thing that I've really learned is I had to try and wrap my head around all the different moving parts here is that, when you think about what the role of the actual cryptocurrency is, right? So if I take, let's say, Ethereum, let's forget Bitcoin for a second. If I'm using Ethereum, and I'm trying to power transactions across an Ethereum network, we need gas, right? We need something that allows us to execute the transaction. And the gas is going to be the cryptocurrency of that network, right? So we're going to use Ethereum to power our transactions on the Ethereum network. So, and that will work really across any industry as long as you're executing this kind of smart contract, you're executing the transaction. So when we think about that, think about if you have to buy oil. If you need to buy oil, you're a country, you're buying oil, you're going to do that in US dollars. So if you're sitting in Canada and you need to buy oil in US dollars, you need to go to the foreign exchange market. You need to exchange your Canadian dollars for US dollars and then you buy oil in US dollars. So that is demand for US dollars. It's demand for the currency that is needed for the transaction. So if I'm executing an Ethereum transaction, I'm going to need to acquire Ethereum to cover the gas, which means that's placing demand on the currency. And the more transactions you're having on that network, the more it's going to push up the need for that currency, the demand, and the value. That's not something that we're necessarily going to see with Bitcoin because unless, it's a couple of people paying each other for something over the network just using Bitcoin, because the Bitcoin itself isn't the smart contract. These networks that are smart contracts, you need those cryptocurrencies to power it. So when people say, what is a cryptocurrency? Well, it's the currency needed to do transactions on that. It's not just an asset that people are betting on, which Bitcoin might be. So that's why I think when you start dealing with Ethereum and Solana, and those are the layer ones that I think most people are probably building on right now. Well, that's an entirely separate force. It's now just no longer speculation because it has utility. So my feeling is, Ethereum. I mean, this is the way I view it, and why I think it's so powerful is the more transactions are shifted to those networks, that's demand for the cryptocurrency. That's going to push the value up. That's the way I see it. I don't know how wrong I was about that. David, you can correct me, please.
Well, when I mentioned that I don't see people that care about the decentralization as much, that does include the companies that are going on the chain. As a lot of people want things to move towards centralized companies, like adoption by companies, adoption by governments, in order to prop up their price, because a lot of people that are in the market want to see institutional adoption in order to make money. What you end up seeing is a lot of groups like banks want stablecoin companies, want stablecoin chains and stablecoin systems that don't require them to pay gas. They want gasless transactions for stablecoins. So that removes that entire demand sector that you just mentioned. Like the entire demand cycle that props up Ethereum that has worked so far doesn't work if all of these institutional adopters want gasless fees, like gasless transactions. So if you have a stablecoin chain, and that stablecoin chain has validators that are run by banks, and those banks don't take gas, they just run their validator because that's what they all decided to do as a group of banks. Every bank is going to have their own validator. Then you don't need gas. You don't need gas that you can have gasless transactions. You don't need fees on per transaction, and you don't have a base currency that's getting propped up now. Whether or not they continue to run their validators or not, I don't know. What we've seen from a lot of corporations is that they'll cut corners where they can, and if they can cut out their validator and say that say they're still running it and let everyone else handle the network while they just save on money, they probably will. How long that goes, I don't know, but that is the way that people are pushing right now. And when I say people, I mean the institutions at the moment. So like, I don't know whether or not that will go. There are a lot of factors in that for where things can play out as they go into the future, but I don't see the demand for that coming up from these groups with all the money that are coming in right now.
That's interesting. So what do you think? What will that do? I mean, if you think about if you think about the existing infrastructure and the way things are working right now, if there is this major push to gasless transactions, what happens? I mean, what happens to all of this infrastructure that we have right now? I know this is what happens when you have such a young industry and you have change happening at this pace. What we're working on today might not be what we're working on tomorrow, but there's still a lot of stuff working on gas and all this kind of stuff. Does it just disappear overnight?
Well, not overnight. It takes a lot to move these things, but this is why I think things are going to move over to more adaptive systems, because you cannot guess where things are going to go in the future. Now with more, the way that things have always played out throughout history with growth is the adaptive things rise to the top, because like throughout history, like for example, ideas. It's not that good ideas rise to the top. People don't win the argument with good ideas. People don't listen to the argument on good ideas. Is that bad ideas get people killed. So the good ideas, the more adaptive systems, those rise to the top over time as the people that listen to the bad ideas die off. This is what happened throughout history. This is what happened with species and evolution, and this is what happens with technology. So with tech in this case, as you see more rigid systems fall, because as things change, they may change towards those rigid systems, they may change away from those rigid systems. But as they change away, whenever they swing away, some of those rigid systems are going to die. The adaptive ones that can move with things, those are going to stick around, which is like quite literally how I tried to build Symphony. I tried to build an adaptive system so that way, if you get something like this, you can just change around how the system works. So that way you can adapt to that. This is very literally how I wanted to build that, and I hope that other systems come around that do the same. So that way, if fees are done away with on these chains, you have another way to either use a reserve, get rid of the main currency and use a different system, or you can prop up the main currency in other ways. So that way you still have governance, or you can use governance in a different style of things. You don't have to predict how things are going to play out. If you create a system that can adapt to how things end up playing out over time. And hopefully we get some new systems that are built on adaptivity rather than this is the way that I want it to work.
So what are you seeing with gasless? Like how pervasive are gasless transactions right now? Because I haven't come across them, but I'm dealing mostly with my vaults and everything like that. So I'm constantly having to deal with gas, and the gas fees on Ethereum can be insane, especially during high volatility periods. So where are you seeing a lot more of the gasless? Like, where would I go now if I didn't want to have to pay the gas?
There aren't very many places, but I believe Tether's chain promised gasless transactions. I think Athena's chain promised the same, and I don't know if any stablecoin systems on other chains promise that, because they kind of have to pay that for the base chain. But within stablecoin systems, you've seen that getting promised, like feeless transactions.
Interesting. So here's another question then that I have, or just another way that I want to, like, because we're talking about the centralization and the push to centralization, right? So if we think about this, I can imagine we're sitting here with Polygon, we have Optimism, we have God knows how many different protocols and different things that we can work with, right? So if I want to move from, let's say, Polygon over to Optimism, and of course I have all my individual tokens, my individual currencies needed to power the gas on those individual protocols, right? So let's say, I'm on Polygon, and then I want to shift over to Base, and I want to use the same thing. So first I'm going to have to swap one currency for the other, and then we're going to have to bridge it and send it over to the other protocol. Okay, so all of this just increases the amount of steps. It increases costs, even though they might be small. But when you do this many times and you're doing this at scale, it could add up. So it's also not the best user experience. And if we want to get more adoption, this isn't for everybody, right? Not everyone's going to want to go through these 5-6 steps to constantly do that. So are we getting closer to pushing a solution that makes it easier to bridge all of the protocols and networks to a point where, it's not like a huge pain in the tuchus to do it? And then at the same time, if by so doing that, does that make this more centralized and defeat the whole purpose?
I don't see us as getting closer to that. Well, okay. I'm gonna change my mind on that. Yes, I do see us getting closer on that, but in very, very small steps. We have companies that want companies that want more market share, and those companies, or with example for exchanges, they grab more cryptos and pull them together on their exchange. So you have them doing that across different chains at this point. So you have them doing that with Bitcoin for native Bitcoin, Ethereum for native Ethereum, and other things for the native assets on those. That's the next evolution on exchanges that we're seeing. Now, once you have that, what you end up having is a system where you can route bridges through, so that way you can go from one into the next. I don't see anyone looking at that yet, except for us. We've done that. We have that on Aria. Like I've very literally been working on an automatic router on Aria, so it's embedded into the wallet. So that way, once it's out and it starts getting added into different apps, you can very literally have any app on any crypto just go directly through that, and so you can work with any crypto on any app. So hopefully that works out well. We'll see. But for anyone else that's working on that, I've not seen it. I've seen people put together different exchanges and move towards different chains, and that is a step. That is like step one. But you also need to do these other things. And overall, as we've seen from developers over the last 10 years, developers do not have user experience in mind. They don't have user interaction within mind. Like what they see is it works, therefore it's good. So with me as an example, and they made the space prohibitively expensive for developers. So if other developers can't get into it, other users definitely aren't. So as a developer, when I got in and I tried to put up a chain and put it onto an exchange, what I had to do was I had to buy a crypto, I had to buy a stablecoin on a centralized exchange, and then find a way to move it over into the decentralized exchange, which required moving over a couple of different chains and bridging and exchanges through those in order to get it into the right format to put onto the exchange. And I had to look on Google. I asked the AI, I looked over on YouTube, and then it was only when I talked to a person that had used the exchange before that I finally got the information that I needed in order to do that. That's too much, and I wouldn't have done it if I didn't have a chain that I wanted to put on there. This is prohibitively expensive for developers, which means other people aren't going to get into it. And other developers, the developers that are already in the space, they think it's fine because it works. So that means it's good, right? Because it works. Like that's not how these things work at all. Just make it easy. Like if grandma can't use it, it's too complicated.
I agree. You know, one thing I think one of the most useful tools that I came across to deal with some of these problems, you know, because with the vaults, right? So the way it works, right? So I have to send the order. It's all done it's all done algorithmically. I have to send it through a DEX. I have to go through a decentralized exchange. And of course, you know, if you're dealing with, let's say, I don't know, depending on which ones, like, some of them can get really expensive, or, you know, you're not always getting the best price at the best time. So I did find this service called Odos. I'm not sure if you've heard of this thing. It's like a smart order routing system that will actually scan all of the different DEXs and find me the best execution for the trade that I was doing. So let's say I was on base and I needed to go from USDC back into like a Coinbase BTC or into wrapped Ethereum. And, you know, it would actually find the best possible DEX for me to execute the swap. And this thing has been really, really useful because it's minimized cost like crazy for me. Otherwise, I'd be seeing some pretty expensive spreads and pretty expensive gas fees. So I'm not sure if you've come across Odos. So hopefully more services like this will start coming out there to start simplifying the complex network of DEXs that we have. I'm not sure if that's something you've explored, or like these kind of smart order routing systems.
It's not, but that is one that I'll want to in order to get that in, because if I can save cost on these steps, that'll be great.
Oh, check out Odos. Maybe it'll work. Maybe it'll work for you.
Yeah. Cordell, I did have a question, right? So
yeah.
Does the vaults take into account market cycles, halvings, or any protocols, while it does look on the DEX for the best price?
Not sure I understand the question. What do you mean by the
so when does your algorithmic trading, does it take into account market cycles or halvings for any cryptocurrency, or does it just look at the current settlement?
No, it just has to look at the current, right? Because the way it works, right? So these are trading systems that are designed, let's say they run either hourly or daily, right? I don't try and run too many on short frequencies, because then you're just capturing more noise. So ultimately what you're trying to do here is come up with a signal that tells you when to trade. And this trading should generate what we call alpha, meaning making more than just buying and holding the underlying currency, because I have to prove that using my trading strategy, you will do better than you would be than just buying, let's say, Bitcoin and holding it for the next 10 years. So the algorithm runs at a set frequency, either daily, like my most successful ones are all daily, because I found the higher frequency ones, like I said, you're just trading so frequently, and the more often you trade, the higher your costs are, but the more false positives you're going to have with your signals. So yes, you can make a lot more money because you're trading at more frequencies, but you're going to get a lot more false positives. In other words, the system will tell you, oh, trade now, and then it winds up being wrong. So the more often you trade, the more likely you are to have bad signals. So the trick is obviously to manage the risk. So when you do have bad signals, it's not going to kill out your strategy. When you do have the good ones, you let them ride. So, but let's say if I do it daily, these things are running at midnight UTC. So the cycles are irrelevant. The signal came in, and for the trading system to work, you need to execute that trade as quickly to the signal as possible. Otherwise, you could, the price will move, what we call slippage, and that slippage could wipe out your alpha over time. So I don't have the luxury of considering the market cycle. Other algorithmic traders do and will absolutely take advantage of. I know some that do more arbitrage across the different exchanges that will take advantage of the pricing inefficiencies, but mine are more uncovering a price anomaly in Bitcoin itself, either finding patterns within the price when, oh, this pattern formed, now is the time to buy it, and you hold it for a day. So in which case it's speed that matters for me, and getting the orders done as close to my signal price, not necessarily taking advantage of the market cycles and structures. But there are a lot of other algorithmic shops that do that. I just don't do it.
Thank you. Thank you. Thank you for clarifying that. Let's get a little bit back on topic. We're talking about, algo trading systems, and Dave was talking a little bit more about his, new wallet. And I think we were also talking about some smart contracts. But what would you say that the crypto market uniquely has its own market identity? Like, for instance, what I find is that the crypto market has like meme culture, gaming culture. It's a lot more like tech innovative compared to like other markets, like the stock market, or even the forex market itself, right? So it technically blends up finance, meme culture, gaming, politics, even, and other sources of, I would say, identity in that. Would you guys also agree with that?
Oh, absolutely. I mean, the traditional finance markets still have the stigma of being an old boys club. That's really what it is. I mean, I can tell you, you still look at all the boardrooms, or you look at what goes on in traditional finance space, you're going to see old guys in suits. And, that's just not what I've come across when I've been integrating into the crypto scene. It's, you get all different types. You can get from the stereotypical cyberpunks from the neuromancer novels in the 1980s to to more traditional finance people. No, I think it's much more vibrant. I think it's going to foster a lot more creativity. And that's one of the main things that I love seeing about the crypto scene, is that the creativity, because of it, is incredible. And from young people, from just people from all different walks of life, I think that's a huge differentiating factor, is the amount of creativity being poured into this industry is what makes it very, very exciting to me.
I completely agree. And not only that, it has a low barrier to entry, meaning that anyone can invest even like $10 into it, and doesn't necessarily have to have like hundreds of dollars, like when you're trading forex or even stocks.
Well, that's a huge point, and it's also it's a little bit of and I'd say it's a much broader conversation, because yes, the whole point behind this, it's such a cliche now to say to democratize access to something. It doesn't even mean anything anymore. Everybody's trying to democratize something to the point where the word democratize doesn't even mean anything. But yes, I mean, when we think about the barriers to entry, that's one of the whole reasons behind this is, and I think the real push, especially from Gen Z and younger generations, is just the refusal to play by the rules set by the old boys club. Exactly. And that's part of what I think is a central part to the whole culture for cryptocurrencies. It's a refusal to follow the rules set by a group of people that live in a different generation, that are completely out of touch with the way the majority of the world lives right now.
Yeah, completely agree. Like, you have 13-year-olds making, like, I would say 100K off of meme coins, or even any type of like cryptocurrency you can name right now. And it's kind of like crazy. There's this meme, I'm not sure if you guys have ever seen on Twitter or even like LinkedIn, but they have like this meme where it has like the billionaire's office of like in the 90s, and they had like these suits and like these desks and like all of this like bookshelves and all that, and then they said like the billionaire's office in the modern day, and you just have like the desk with like a laptop and like a person's bed behind, and it just really shows you like how times have changed based on I'd say over the last decade, 2 decades ago.
I agree. But you know what? It's interesting also, because it also opens the door to a lot of potentially very damaging things for society. I mean, we could debate already the evils that social media has put on society in terms of the pressure it puts on teenagers, and everyone's looking at social media and seeing how amazing everybody's life is, even though that's not reality at all. Sure. It's just been making us feel like we're not as good as everybody else out there and all the influencers. But the one thing that I don't like, and I'll tie it into cryptocurrencies in a second, is that you cannot watch a sporting event now without being bombarded by ads for gambling. So we've sort of been already taken over by, no need to name companies, but, we're trying to gamble on everything, and we're creating, generations of degenerate gamblers. And the cryptocurrency industry can amplify that as well, because it does give access to anybody, and look, I'm not a psychologist, but gambling, I'm pretty sure, is a disease. To get to a point, most of us could probably handle it, but a lot of people can't. And that is damaging for a society. And the reason why I think, we need to be careful on top of it, giving access to everyone, is when I was in Singapore, Token 2049, I was hearing from a number of people that the VCs and a lot of the private equities, the area that they were most interested in now and getting into were finding people that are going to tokenize prediction markets. And that scares the crap out of me, because the prediction markets are essentially, now you could gamble, and that's what it is, on any event. You could gamble on who was going to win an election. It's just, so we're just have this mass, and I'll use the word democratization of gambling, and then tokenizing it is going to make it even easier for people to get into it. So that's probably the one area that I'm most concerned about, is how, the whole ease of access, and this is going to potentially create more gambling addictions, especially with, the allure, oh, you could make millions and millions, but very few people make millions of dollars trading meme coins and trading this stuff. All right, very few people. It's like, so that's my concern about that, Gio, when you bring that up in terms of the ease of access and all that. That's the one bad thing that I see, especially if we start getting prediction markets tied into this.
Yeah, and I think like the crypto market, the ease of use is also like a double-edged sword, depending on like what side of it you're on. Any points do you have to add to that, David?
I think that's part of the market, and then also part of the times that we're living in.
Sure.
With the pushback against regulation, that's because of how previous generations got around everything with regulations. It's like, oh no, it's not taxis, it's rideshare, Uber. It's like, oh, it's not piracy, it's streaming, and that's like very literally a TV service that we've got like right here, and a lot of people use. It's literally an app that you can pay for. It's right there. But because it's tech, because it's been rebranded, it's not that. So with the prediction markets, with tokenization of these things, it's not gambling. It's just a prediction market, which means that you can't regulate it with gambling, because it's not that. It's this new keyword. Like you see this in a lot of different places. You'd think that that it wouldn't be quite so focused on syntax, but on meaning. But apparently everything's focused on just the syntax. Now, with when I say that it's part of the market, it's kind of because everything on this is a pushback against the boomers. It's kind of like all in against the boomers on this. So you had boomers that focused on stocks. Now you had Bitcoin created by a Gen Xer, which I do say Gen Xer, we don't know, but like I do say Gen Xer because millennials at the time were a little bit too young to probably to code that entire thing. Now you have crypto popularized by millennials, and now Zoomers are taking off with it. Now because millennials were still half and half in the stock market, and then Zoomers are just like running with it. Now with this stuff though, with prediction markets, with ease of access, and with everything, you need the ease of access because you have everyone now with no money. And what are gambling ads saying now versus what they used to say? What they used to say was, oh yeah, you can become a multimillionaire. You can get generational wealth. You can do this, do that, do whatever you want. Like if you win. And now what they're saying, it's like, oh yeah, you can pay your bills. Like this will help you. This will help you get through the next month. Like we are in such bad times that gambling is the way to have hope right now. So like, yeah, maybe you can pay your next few food bills. Maybe you can pay your rent if you win big this week. So like it's a different message because we're in a different time, and the market that we have isn't entirely a way of just saying F you to all the people who actually have the money right now. So I do think that both of these things are just a part of the market and part of the times, and maybe when things get better, we won't see it. Maybe. But as it is right now, I think it's at least somewhat necessary because people are very literally asking for it just because of where we are at the moment.
Well, then here's the question. All right, because again, like I'm going to come back to this because I see this on a lot of my LinkedIn threads, especially from more the big research shops that I follow. Is Bitcoin going to zero? Why do so many people from the old boys club say that Bitcoin is going to zero because it doesn't do anything. It's not a store of value. It's not a hedge against market crisis. It's not going to replace gold. So then what is Bitcoin, and will it go to zero? Oh, I'm sending that to you, David. That's for you, man. You go
let
first.
You go first. Actually, yeah, Gio, you take that first, and then I'll chime in.
Okay, personally, I would say no. One of the reasons why I say that is because if you look at, over the course of, let's say, 4 market cycles, right, Bitcoin has always broken its all-time high in the past, like 3-4 years, well, every 3 or 4 years, even especially after its halving, right? I think that crypto itself and Bitcoin shows that crypto itself is going to be the new face of finance, whether it's, meme coins, stable coins, or even just payment gateways in general. I think Bitcoin Lightning, the Lightning Network, is an example of this. Correct me if I'm wrong, David. But right about now, you already see like banks in 2025 adopting crypto. Even some big first world countries like America, El Salvador, France, even getting their own reserve. I don't think Bitcoin will go to zero itself. I highly doubt that is. And if so, the entire market is going to be doomed. That is my opinion on it.
Yeah, and he runs an exchange, so he sees his volume and all. I have a little bit of a different take. I see a lot of crypto as being speculative on tech in the same way that it is on AI. Now, what we have right now, which a lot of people are starting to identify, is a bubble in AI. You've got NVIDIA, which buys into OpenAI, which buys into AI startups, which buy back into NVIDIA. So that's all propping up the market essentially on fraud. Now you have a little round robin there that's just constantly spinning things up, and that can't go forever. And they're basically propping up the entire stock market. When the stock market falls, when tech falls, you see a fall within crypto because it's not decoupled yet. Now, what you have with Bitcoin is it's a tech play on what I see in Bitcoin is it's a tech play on blockchain, but it's not the only blockchain. You can fork blockchains infinitely. Now, if you wanted to push crypto, you could push it with Bitcoin, but you could also push it with Ethereum. You could push it with Solana. You could push it with Athena's next network. You could push it with USDT's new network. You could push crypto with any of these. You don't have to push it with Bitcoin. So if you get adoption and you get adoption through Ripple, that's not going to bring any value to Bitcoin. But if you get a crash in tech or a crash in the economy, what we've seen is that people don't stay in Bitcoin because it's a store of value. They use store of value whenever things are going well and they have extra cash. They buy into Bitcoin at that point. But whenever things crash, Bitcoin crashes as well because a lot of people panic, they sell, and then they go and use that to buy up things very quickly before those things get bought out at the store or they get expensive. So I don't see that as being a store of value the way the current value narrative is. But what I do see it as is a tech play. And so if tech falls because of the AI bubble, or if tech falls because the US dollar falls because the bonds are selling off, and like next time a crisis happens, the US government is going to try to bail those companies out again. In those cases, I see Bitcoin selling off, and maybe it comes back, maybe it doesn't. But there are other cryptos as well, and every single time Bitcoin's fallen, it's given market share over to other cryptos because those other cryptos have utility. So I do see that happening. If Bitcoin does take off, El Salvador is still buying it. Like it could very well still keep up value. I don't know. But what I do see happening is a move towards these other things and a looming scenario where it will crash because of economic and tech factors.
Well, there's a difference between crash and going to zero, right? Because, Bitcoin might get to 1 million and crash 4 or 5 times along the way. It's happened before. It will very likely happen again. So, but I do think we also need to separate, whenever I see people posting these things, or it's like, well, are you talking about cryptocurrencies in general or just Bitcoin? Because that makes a big difference, because I do not see crypto or the whole blockchain going to zero. If you think the blockchain is the next generation and all transactions will eventually go on it, like we discussed before with gas and the need for the currencies, by definition, then it cannot go to zero. But yes, if for whatever reason Bitcoin loses its status as the premier trading vehicle for the general idea of cryptocurrencies, then absolutely Bitcoin could go to zero. If Ethereum, let's say, becomes now the largest by market cap, and that's where all the demand goes. Yeah, sure, why not? But I just think people need to really be careful how they phrase it. What, are you talking about Bitcoin, or are you talking about the blockchain and cryptocurrencies in general? So, because I definitely do not see Ethereum going to zero. That I do not see. Bitcoin, yeah, could lose its luster one day, but is it going to replace gold? Probably not. That I don't see happening, because that's a debate I do see everywhere. If gold is supposed to have this safe haven hedge status, does Bitcoin have that? No, it most certainly does not, because as you just said, David, market economy crashes, Bitcoin's going to crash as well. Whereas gold typically will do well in that kind of environment. So I don't know. I just get very tired when I see people saying Bitcoin's going to zero, because you need to be very clear. Are you talking about Bitcoin, or are you talking about all cryptocurrency? And I think too many people that don't know what they're talking about just group them all together. And that's a mistake.
I just wanted to add to that point, Cordell. You did say that gold is more of a safe haven than Bitcoin. Bitcoin is also called digital gold, but I think at one point, correct me if I'm wrong, Bitcoin's market cap did pass gold's market cap at one point. I think being the fourth highest asset with a market cap. Well, yeah,
it did, but that doesn't make it a safe haven asset.
That is true. It's still volatile. But I did want to know, what are your thoughts on that still, even though gold is technically a safe haven for the reserve currency?
Well, if you think about it like this, though, there's a lot more gold in circulation than there is Bitcoin. Now, some would argue that the whole gold industry is a scam, that, the gold and diamonds, it's just been promoted by mining companies of scarcity to give it value. And here's something that most people probably don't even know. There is so much gold dissolved in the oceans that if anyone ever found a way to economically extract gold dissolved in salt water, gold would become valueless in a day. And this is what happened to aluminum. So a lot of people might not know this, but aluminum was the most precious metal on the planet for a long time. And it's not because you couldn't find it. It's because it never occurred in its pure form. So whenever you would find it locked up in rocks, it was always tied up with other things like silicon, oxygen, iron, and it was impossible to separate. So if you actually found a pure sample of aluminum, that was worth an insane amount of money. It was shiny, it was everything. And then all of a sudden, this guy came along, an American, and found a way to purify aluminum out of rocks and get a pure supply. The value of aluminum went down overnight, was useless. But this wound up becoming one of the most important American companies ever. Do you know what that did we talk about this already? Do you know what that company was called? Alcoa. So Alcoa started because a scientist figured out how to extract aluminum from rocks and get a pure form. And that's where Alcoa came from. So gold, we're supposed to think it's so rare and so this, whereas Bitcoin, we know we're not getting any more of, right? That's one of the differences of it. There's a finite supply of it. So in theory, that should make it more valuable than gold because of scarcity, in theory, right? We're always mining more gold right now. They're always finding a new gold deposit, how expensive it is to extract it, whatever. But remember, gold doesn't produce income. There's no yield to it. There's no cash flow. There's no dividend. In fact, you have to pay to own gold because in theory, there's a cost of carry. You need to store it somewhere. So there's storage costs. So technically, you are losing money just by owning gold. What pushes it up? Well, supply, demand, jewelry, whether or not it's going to be used for a reserve currency by other countries. That's what tends to affect the price of gold. But to make something a hedge or to make something a crisis Well, then this is when you need to get the negative correlation to equities, where you need to have the price really moving in the opposite direction for when equities move. And Bitcoin doesn't do that, right? Bitcoin will fluctuate between being tied to, let's say, gold or being tied to NASDAQ. Those are the two main drivers, I would say, or I wouldn't say drivers, but the two main relationships that Bitcoin has. It's either viewed as a risk asset or is it somehow being compared to gold? And it's like a constant tug of war. Normally it behaves as a risk asset and just a risk asset on steroids. So it does not have that hedge status. So while it might surpass it in market cap, could also just be a fad. It could just be, oh my God, it's Bitcoin, it's going up. And it's momentum. And don't forget that momentum is the single most powerful driving force behind any asset, every asset class. It's momentum. It's a herding mentality. It's the fear of missing out. So yes, it could surpass gold many times over for market cap for many of the reasons I just said, but it doesn't make it a hedge. It doesn't make it a crisis currency. There was a long answer to that. But anyways.
Well said. That was well said. It's fine. But I think we're coming to the 45-minute mark or hour mark. I've lost track of time. The discussion was very good, but we're at like the hour mark or so.
Sorry?
We're at like the hour mark or so.
Oh yeah. We've gone over as we always do. The conversations just get so crazy.
Yeah. So, let me close it. Let me close out episode 6. I'd like to thank everyone who came out here and, brewed a cup of coffee or tea and, let us ramble a little bit about Bitcoin, no gas fees, and, why the crypto market is unique. So I'm going to close off here. Cordell, David, do you guys have anything to say, as in the co-host?
It's fun as always, guys. I really love this. We always have such great conversations. I hope everyone out there loves it.
You, David?
I will touch on one last thing.
Sure.
Cordell brought up an American making that change to mining aluminum. Now, one thing that I do think brought that up was the freedom that America used to focus on, like freedom to think for yourself. The individualism, like the focus on individualism allowed you to create new ideas and pursue those. And that is something that a lot of cultures didn't focus on. A lot of cultures focus on collectivism. And with collectivism, you go with what has been done before. With individualism, you think for yourself and you can create a new way. So that is something that America used to focus on, and being able to create aluminum did that. One thing to tie it back to what we had started talking about with the crypto market, there is a big focus on individualism. You make something, you see where it goes. So that created a lot of new things, and I do hope things continue with that. But I do think that as opposed to doing things the way that they were always done, like with the stock market, is the way that is what made crypto different on this. So I do hope things continue with that, and I would say that would be the single biggest driver of it. And so I do think that being a nice point to touch on, as that last bit that you brought up with the aluminum, would be a nice one to end with.
Okay, nice.
Awesome.
So, this has been episode 6 of the Crypto and Coffee podcast, and see you guys in episode 7, whatever the topic is, of course.
Cheers, everyone.
All right.